Well, the Nifty is now on the verge of breaking that 25,200 mark. It's cut its losses, or rather cut its gains by over 200 points from the day's high, currently at the day's low, and sitting with a gain of just about 50 points. So when we started the show, the gain was about 100 points. That's halved. And a lot of these heavyweights are weighing the Nifty down. So pull up the intraday chart of Reliance. That's moved to the low point of trade. And HDFC Bank as well as ICICI Bank, both of them lower as well. The Nifty Bank struggling below that 59,000 mark, sitting now with a gain of just about 100 points, on the verge of breaking into the red for that frontline index as well. But let's talk about a couple of good numbers that came in. Thangamayil Jewellery reported a good set of third quarter earnings, gold prices, festive season, new stores in Chennai. All of that aided performance. SM Lakshmanan, who's the Vice President, Finance and Accounts of the company, joins us. Mr. Lakshmanan, you know, you had told us when you joined after the second quarter performance that October was the best month for you. You crossed 1,000 crores in revenue there. You upped your revenue guidance from 6,000 to 7,000 crores as well. Now, one wonders whether you can do better than 7,000 crores as well, given the sort of surge that we've seen in gold prices or not. So I wanted to understand, one, whether you are revising your full year revenue guidance upwards or not. And the second part, silver. I mean, gold, yes, everyone was, looking at, but silver suddenly came out of the blue and outdid gold so much that despite the correction today, it's still holding well above that 3 lakh rupees per kg mark. What's interesting is that while 95% of your gold exposure is hedged, 65% of your silver exposure is unhedged. So the possibility of you making a big inventory gain in silver in the fourth quarter is very high as well. So if you could give us a sense on, what that inventory gain in silver could be and whether you will cross past that 7,000 crore mark for the entire year or not.
Good morning, Mangalam. Thank you for the opportunity. Tangamay Jewellery Limited has achieved a turnover of 5,661 crore rupees for the 9 months of FY 25-26, registering a retail revenue year-on-year growth of 59%. In terms of volume for the 9 months, gold increases by 9%, silver volume increases by 24%, and diamond volume increases by 28%. As far as the current quarter Q4 is concerned, yes, the tempo is maintained. And to answer your question as well, the company is looking at crossing an annual revenue of 7,500 crore rupees for the financial year 25-26.
All right. And on silver, you 65% of your silver is unhedged. What is the potential inventory gain here that we should look at?
Yes, Mangalam. Silver hedging is at 35% on 31st of December 2025. And to answer your question, yes, the silver revenue composition is very minimal as far as the total revenue of the company is concerned.
Mr. Lakshmanan, good morning. Thank you for joining in. Do you have plans to increase that number, first up, for the hedged positions from the current 35%? That's one. And what about further hedging of gold as well? You can just club in that as well.
Yes, to answer your first question, yes, probably the company could be looking at increasing the hedging level for the silver from the present 34%. This first point, yes. The second one is, yes, 95% of the gold inventory is hedged. Since it is almost fully hedged, the company's focus is on the operating profitabilities.
And how much would you look to increase that silver number to, Mr. Lakshmanan?
How much to answer the question, if somebody looks at the Thangamayil Jewellery's 4-5 years by hedging levels, it had been around 65 to 75%, which has been elevated to 85% to 95% as a policy. And the company sticks to that policy level, and it is 95% as of 31st of December 2025.
No, what we are trying to understand is silver. And also because, 5% of gold is still unhedged, 65% of silver is still unhedged. The quantum of gains on silver and the quantum of unhedged positions would lead to a decent jump in your EBITDA, even though the overall contribution is not so much. Even on gold, while it is a large contributing business, 5% is unhedged, which will still give you some gains. In the last 3 months or so itself, we've seen a big surge in gold, even over and above what has happened already. So what we want to understand is how much more operating benefits could come in from just this unhedged position and how much can come in from the structural changes that you're making. Structural changes, you said that 6 to 7% is where the margins will sustain. But beyond that, in the very near term, what kind of gains could accrue over and above that?
Yeah, you answered the questions. Since it is a 95% almost fully hedged, the company's focus is on the operating profitabilities. And as far as silver is concerned, yes, the present 34% could be increased to a higher level in the months to come. And the silver revenue composition is very minimal as far as the total revenue is concerned. And that, since we have talked about the EBITDA, let me tell you that the EBITDA margin for the 9 months of this financial year is at 6.67%, as compared to 4.91% of the previous year 9 months. This is predominantly due to the Chennai showrooms scaling up, as well as the non-gold revenue. My non-gold revenue is increasing at 65% year on year.
All right, and you expect that to continue, right? What is your mix coming in from Chennai likely to be in FY27? FY26, you had said it'll be 20%, and you're on track for that. It's about 17% right now. And how much of your revenue will be non-gold in FY27 and FY28?
Yes, non-gold is expected to be on an encouraging trend. It is at 65% as compared to the earlier probably 20s or 30s or 40s percentages. Now it is 65%, and it is expected to continue for all the possible reasons. And as you very correctly said, yeah, Chennai showrooms present revenue composition is 17% for the 9 months, and is expected to cross 20% on a full year basis.
Mr. Lakshmanan, what are your plans to open new stores going into the new financial year? You're currently at 66. Where do you plan to take that count to in FY27?
Yeah, 10 new showrooms have been opened for this financial year during the 9 months, taking the net store count to 66. Out of the 10 showrooms, 7 have been opened in and around Chennai, and 3 in non-Chennai in the state of Tamil Nadu. As far as the expansion is concerned, yes, the company is looking into the second phase of expansion in and around Chennai from the first quarter of FY26-27.
All right, and could you give us a number on how many stores are you planning to open?
Probably without mentioning a number at the moment, the expansion is on the track, and we will try to share the number probably by Q4 end.
All right, Mr. Lakshmanan, pleasure having you today. Thank you so much for sparing time and joining us to discuss your numbers. Wish you good luck for the rest of the year as well. That was the management of Thangamayil Jewellery. Stock down around 2.5%, cooled off from the highs of the day. You're seeing it has been a good performer over the last 12 months. Take a short break. Markets being the more important factor here. The Nifty looking to claw some of those lost gains back. We discuss some technicals with Siddharth Rai Mangla of Sid Investing Financial Services on the other side.